Welcome back. So we have our reaction. What just happened? Why is it that the crypto market is moving? We had the CPI reports come out. Inflation fell faster than my underwear whenever I see a pretty lady on the screen. Not quite that fast, unfortunately. We were down by 0.1%. And so that has caused a bit of a reaction. Just to kind of quickly show you, as you can see here, look, basically nothing has happened. You can see that like the numbers are still the same. But overall, we do have some good news, don't we, AJ? It hasn't been bad to us.
No, no, and I think at first the market was quite confused with what to do, and I'm just going to let everyone know I did close that trade that I did actually open. The markets were looking very, very bearish, but I feel like this coming out is there was uncertainty at the start of it. There was a lot of volatility coming in. We saw that price trying to push down. However, we are actually seeing the price the price of Bitcoin. If we take a look at my screen quick, we can see that the price of
Yeah.
Bitcoin is having a slight push towards the upside. So when that inflation data did come out, I did in fact close that trade because I knew that people were going to look at this in a very bullish way. It coming out as forecasted. To be honest, it is more bullish than bearish. If you would ask me, I don't know what your opinion is.
Yeah, no, it is. It is. And I think, we did see a bit of a pump over the past couple of days. I mean, like yesterday, Bitcoin was up by 3%, I want to say. We finally touched that 18K level. And again, that was a bit of a resistance, but we saw, we did see some momentum pushing us forward. And I think that is because, we know that inflation is coming down. And this really just feeds into the story of, inflation going down. But what does that really mean? Okay, so yes, we're seeing inflation come down. Let me just see if we see anything on here. No, there was a Bloomberg article about it, but it's literally on the screen here. So the real question then becomes like, this is now a potential real possibility because bear in mind, okay, we're at the 4.5% interest rate hike, or interest rate. That's the level that we're at. And now really what that means is that's the higher bracket, okay? So we're currently here. This is why this is blue. I haven't highlighted it. It's just because this is what we currently are at. Now, previously, we were kind of looking quite likely that we were going to see an increase and then have really small gradual increases so that we go, up to 4.75, then up to 5, and then we kind of continue. We begin to slow down, but the terminal rate was pretty much guaranteed to be around about 5.25, especially if you keep going. So you see here, the chances of getting that 5.25 were quite likely. But now we're seeing the Fed might actually have to do a bit of a U-turn and a flip-flop relatively quickly. So we might not see this 5.25 as the terminal rate for the Fed, and we might actually end up having, only maybe up to 4.75 or even up to 5%. As the terminal rate for the Fed, which actually is really good for markets, it's really good for businesses, and it means that we're going to see a lot more money move towards these risk-on assets, of which obviously Bitcoin is one, and that's why we're seeing a nice little pump in everything from the Nasdaq through into crypto as well.
Yeah, definitely. And looking at looking at sort of the technical side of things as well, even just looking at that S&P 500, that we are coming into resistance on that S&P 500, as you can see right here. We've got this downtrending resistance level, which if we can get above, this is going to be very, very bullish. I do think, especially for the traditional markets. We've been using this over the course of 2022. So since January the 4th, this was the first time we tested this downwards trending resistance. Okay, and then we tested it once again back in March 2022, literally to the dollar. Okay, and then we did it once again in August 2022 to the dollar again. We did it in November 2022 to the dollar again as well, and then we did it in December 2022 as well. We went over it slightly, hitting this resistance level up here at around $4,155, but initially getting rejected from there, still not getting that break above it. And again, once again, we are testing this level. Okay, and if we can break above this level, I do think it's going to be bullish. We do just have to be aware that we do have this major resistance level here. We got close to potentially breaking it towards the upside here, because we did get a wick above it, and we hadn't actually seen any sort of big wick above this resistance level over the whole course of 2022. But once we did get that big wick above it, we did find resistance even above that as well. So for me, yes, it's bullish if we can break above this, but we also need to break above this major resistance here on the ES, which is, the S&P 500 E-mini futures. And if we can do that, then I think we can start looking at, the traditional markets being really bullish, and, that will most likely feed into the crypto markets as well. But for me right now, we do just need to break above this resistance here. And once we can get above that, use it as support and bounce, we can be on our way to start seeing a lot higher prices. But this has acted as major resistance previously, major resistance, okay, resistance before the slight breakup, resistance here, and just a whole load of support even previously as well. So this is just a major level that we need to be looking out for. And for me, we need to get above this. Until we get above this, I'm not going to flip bullish. I can flip bullish in the smaller time frame, but on the bigger time frame, I'm not going to flip bullish until we can at least break this major resistance here, and stay above that. Use that as support, because we broke above it here. However, we couldn't use it as support, so we retested. So we broke back down, retested it as resistance, and then we saw that rejection. So we need to break above these major levels and hold them as support rather than getting fake outs, retesting them as resistance, and then having another leg towards the downside.
Yeah, and you're absolutely right there, because like one thing that we should consider, guys, is that, even though, yes, we have just seen a lower chance of having crazy inflation, we have seen, a bit of price stability. And if we get a bit of price stability, that is usually the bedrock of a recovery for, for an economy. So these all look like they're very, very good signals. But at the end of the day, we still have to consider that, it was only, what, 3 weeks ago that we had Goldman Sachs, JP Morgan, Citibank, Bloomberg, everybody saying that there's a 99.9% chance of a recession. So even though we are still, we're seeing signs of recovery, we shouldn't get too excited and and start placing our 100x longs just yet.
No, not just yet. And even on the charts, I'll go through the Bitcoin chart in a moment, but even the charts aren't looking too bullish right now. We're getting too overextended, but I'll get onto that in a moment. But this is what I showed in yesterday's live, Ben. World Bank warns of global recession in 2023. This is what I was looking at. 2023, is this going to be the year that we sort of finally either confirm that we're in a recession or we go into a recession? And then I was looking at also Goldman Sachs is laying off as many as 3,200 employees this week. What do they know that we don't know? They're only going to be doing that to save money. Okay, why do they want to save money? Well, maybe they know something that we don't, as in, maybe we're going to go into a recession. Maybe we are going to have even harder times than we've already had. We're going to see the price of traditional markets and the price of the crypto markets have that final capitulation event. This could be what they're preparing for. And even Coinbase as well. Coinbase announced on Tuesday that it was laying off 950 people, about 20% of its staff. That's a lot. Of cutting 20% of your staff is a lot of people.
It is, yeah.
So,
And that's you're absolutely right there, because I'm glad you mentioned that last little leg down for the stock market, because looking at the likes of Goldman Sachs, looking at the likes of Coinbase, Facebook have laid people off, Amazon have, pretty much every major company has started laying people off. And it's all just that constant theme of people at the top of these companies knowing that they're not profitable, knowing that sales are not enough, knowing that their costs are too high, and essentially the shareholders are going to get annoyed at that. And so this is why they're then laying people off, because that's going to then cut the costs, and hopefully they'll be able to hit those earnings targets and stuff like this. But at the moment, the overall thought process is that they won't be able to hit those sales targets. They won't be able to become profitable, and they won't hit their EPS, their earnings per share. So if they don't do that, then obviously the stock market is going to go down. And so, with each individual stock, when it comes into earnings season, this is where I think we could see a bit of an issue with, people or different companies missing those earnings, the earnings expectations. And that's then going to bring confidence down, and this whole stock market, I think, could lead to another step to the downside, which obviously, is going to affect Bitcoin as much as we might want to think, it's not correlated. Unfortunately, it is.
Yeah, and
Yeah.
yeah, definitely, and
So if we have
fundamentally.
a look at, yeah, I was
Sorry.
going to say, sorry, do you want to bring up, are you on the price of, on the Bitcoin chart at the moment, or?
Yes, I am.
Yeah,
Should I
okay,
bring
I'll
that
bring that
up?
up for you. Yeah,
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 so
yeah.
even on the technical side of things, it's still, as much as I would like to get bullish, I just, cannot get too bullish right now. Starting off with this daily chart here, we've got this previous range here, which, we could argue that it's broken towards the downside, or, are we still within this range? We don't know yet, because we do have some resistance coming right above us. So if we actually drag out this value area low here, let's see if this is still lining up in confluence with this resistance. For some reason, it doesn't want to move across. Let's see. Oh, no, it's moved down. Okay, so basically what I'm looking at here, let's move that back. Basically, what I'm looking at here is that, we've still got a lot of resistance above us, okay? And for us to, or for me to even flip bullish and say, we're potentially going to 20,000, maybe making it back to 21,000, we do have levels we need to break. And that first level is going to be between $18,400 approximately and $18,800. We've got this major resistance level right here, this orange and red box. We know that we've used this over the course of 2022 as major support. As we can see here, we've tested it multiple times. And we've held this pretty well as support. Unfortunately, we did have this big crash here, and we did break that towards the downside, retesting it as well to the dollar right here on the 14th of December. And once again, as of today, we are actually retesting this resistance level again. So from here, there is a possibility that we could break above this. If we can break above it, use it as support and bounce, this is bullish, okay? This is bullish, but the technicals are still looking bearish for me, because we are still below this resistance level right here. And there is a high chance that we could see a rejection from here. Reason being is, if we bring up the RSI, very overextended on that
Yeah.
RSI. Okay, I've showed this
I just
multiple
wanted to
times.
ask that. It's been so, we've been so
Yeah,
excited over the past couple of days. You can
yeah.
kind of forget and get caught up in all the commotion, and you look at the RSI and you're like, oh shit.
Yeah, exactly. You don't want to get caught up with the FOMO. Everyone's saying, "Oh, go long, go long." The price is pumping. We're going back to all-time highs. You can't get caught up in that FUD. You've got to look at the what the charts are telling you as well. And even here, the RSI just about got above the 70 level. Okay. What happens? Bitcoin topped out and we saw a big crash. Okay. This has happened multiple times before, back here as well. Okay. RSI over 70. Okay. We established a top. Okay. And we also formed a bearish divergence there as well. And then we saw the price crash. Even here. Okay. Maybe it wasn't as big of as a crash, but initially we still had a pullback. And the majority of the time we do see pullbacks, and the majority of the time as well, they are pretty big pullbacks as well. We can have smaller pullbacks, but this is just something that we've got to be aware of. We're coming into major resistance. RSI is looking very overextended, but also we're forming a bearish divergence as well. Okay, so we're looking at this here, and we're seeing. Let's just take this magnet tool off for a second. We can see this high here, the previous high, the previous swing high. Okay, and we're forming another swing high here. Okay, and this swing high is lower than this previous swing high, so we're forming lower lows on the price action. However, if we come and have a look at the RSI, we can see that we're forming higher highs. So this is, a bearish divergence. Okay, we're forming a bearish divergence here. RSI is heavily extended, overextended, and we're coming into major resistance here as well. So for me, just solely looking at the technicals, they're still not looking that good. And to add on to that as well, we also have an ascending parallel channel here, where the resistance of that is coming in pretty close to that major resistance as well. So for me, there's a lot of resistance. There's some signals telling me, well, two signals telling me that we are going to see a retracement just on this chart. And this is not even just looking at any other charts as well, looking at other time frames, or using any other indicators. This is just using some lines and the RSI. We could bring in more indicators, and they're probably saying the same things. Okay, but there is a lot of information just there telling me that we are most likely going to see a pullback from here. So we do just have to be aware. If we get bullish news, yes, we could see the price push, but we want to hold that previous resistance as support if we do break above it, to sort of confirm that we are getting that break above it. But for me right now, it's still looking bearish, and we could still potentially have another capitulation event towards the downside. As of right now, I'm sort of unsure if we're going to get that final leg down potentially to 14,000, 12,000, 10,000. But what I'm looking at here is telling me, we are coming into major resistance, and we've got a lot of signs telling us we're overextended and a pullback is needed. So we do just need to be very aware of that as well.
Yeah, there you go. Couldn't have said it better myself. I think it's probably now is a reasonable time instead of making it, too long.
Yeah,
Unless you guys have any other questions, I'll quickly summarize from what Krippy has said. End of the day, inflation is still high, true.
yeah,
Ukraine and Russia war is still ongoing, true. And I think it's not going to stop, for another long time. S&P is still relatively high and still has space to come down, true. Everyone also says that they will, just as you mentioned earlier on, AJ, like
yeah,
perfectly. Like everyone's laying people off, everyone's going to have
yeah,
no money. And also, with more layoffs comes less money in the economy because less people buy stuff because more people don't have a job. So that's going to be an issue. USA using up all their oil reserves and need to be replenished. Absolutely true. The only hope is that when China does open up, hopefully it's in the summer and then less people need to heat their homes. That would be the only kind of benefit. But you are absolutely right. The price of oil, the demand probably will reduce in the summer, hopefully. But yeah, even with China coming back online, they're going to start producing more stuff. So we're obviously
yeah,
going to need more. I said, oh, and the Fed is still going to continue raising rates with QE to continue. Exactly. QE is going on, quantitative easing. It's like I can never say the word easing. I always say easing. But that's still
like
going to
you're
go on at the
seizing
rate
the
of what,
pot.
90 billion, 90, yeah, 90, I want to say 95 billion, something like this. It's
Yeah,
crazy, so that's happening. And also, rates are still going up. They're not
yeah,
reducing, they're not going down. It's not like, oh, inflation is now going down, so the rates are
yeah,
going down. No, rates are still going up, you know. So it's really not, it's not ideal.
yeah.
Um, but yeah, that's everything from me. If you want to quickly drop something in before we wrap up.
Yeah, just quickly, I'll just cover this chart quick because as I know I said at the start, I as soon as that inflation data did come out, it came out exactly as forecasted. For me, this was a bit more bullish than bearish, so I did close that position that I had open in a slight loss. However, I'm just letting everyone know that I am still looking at the price pulling back from here. Reason being is, here's an example. Okay, we had the previous high here of the range. Okay, and then what did we do here? We had a liquidity grab right here, swing failure pattern. Okay, and then the price pulled back to value area low. Right now, I'm still looking at the same scenario. Okay, we've had this previous high here. Okay, that previous high has been taken here, grabbing the liquidity. Okay, and it looks as though we could get a swing failure pattern right here. Not confirmed yet. I would like to see, some red candles coming down for that confirmation. But what I'm looking at here is still a swing failure pattern. If we do see a candle break above this previous high here, then I wouldn't necessarily call it a swing failure pattern. I would expect the price to continue towards the upside. But because we're having a big wick, grabbing the liquidity from back here, and what I expect is if this continues and we continue to get slightly, just a little bit more downside, then I think this is going to continue into the price pulling back all the way down to this support level here potentially. So for me, I'm still bearish. Although I did close that trade, I closed it just in case, because, it's more bullish than bearish for me right now. But the charts are still looking bearish. Okay, the charts for me are still looking bearish. We are testing this resistance level right here, and we tried to break it, but it looks as though we're just testing literally the line right now, and we could see a rejection from here. As I said, swing failure pattern is potentially in play. That's exactly what happened from this previous high here to this high. We got a swing failure pattern here, and then we saw that price pull back. So I'm still looking for something like that to happen. Charts are still looking bearish for me. Even the RSI still very overextended. So for me, a pullback is necessary. And then, potentially we could get some more upside later on. But for me, it's the price has at least got to come back down to value area high. If it breaks value area high, then we're looking at value area low. And then we could look for a long position potentially down there. If there's no signs telling us that the price is going to go lower, we could maybe look for a long from value area low to value area high. We'll have to see if the price does make it down there. But I just wanted to add on to that. I'm still looking at the price being bearish.
Yeah, that mate, I couldn't have said it better. That is absolutely correct. So there you go, guys. Look, I hope you have a really great rest of the day. Also, don't forget to smash the like button, obviously. Subscribe to the channel if you haven't already. And thank you all for joining. We really appreciate it. And I hope that you guys enjoyed some of the content as well.
Yeah. Thank you
Thank you
very
very
much
much
for
for
watching,
watching.
guys. See you later.
Take care.